So India's defense sector has caught the imagination of retail investors, and mutual funds have responded swiftly. So there are six thematic mutual funds. All of them have been giving good returns. So 52% returns have come in the last 3 months. So a lot of questions have been coming up. So all the different stocks are rallying. Should I purchase a defense mutual fund instead of going for individual stocks? So let's do a review of all the mutual funds that are focused on the specific theme, which is the defense sector. So if you look at this, there is a 52% return in just 3 months, and all these stocks are richly valued. Should you invest now? Is the question. So why this sector is booming? So the primary thing is with geopolitical tensions making headlines and the government's focus on self-reliance in defense manufacturing, the story writes itself. So after Operation Sindoor sent a clear message across the border, investors got the message to defense is hot again. A 40,000 crore emergency procurement push has happened, and a few strong earnings from top players across the defense space. So there is a rally that looks locked and loaded. So fund returns typically mirror this momentum. So there are two types of funds here. One is active funds, and then the other one is passive funds. So there are total six funds, out of which five are passive funds. They directly invest in the index of defense. So whatever defense index return comes, the same kind of return will come in these five passive funds. And there is only one active fund, which is from HDFC. So let's look at the performance snapshot. So out of all these, there is only one company, HDFC, and you can see the returns here. So this is 18%, whereas everyone else is showing better returns because they directly invest in the index. So they only invest in leaders, whereas HDFC also invest in small companies like Premier Express, 3 month returns, 6 month returns. So overall, the numbers are 37% plus in the last 6 months. So this looks very impressive. The rally has already got huge steam and it kept running. So let's look at passive fund. So first, let me tell you what is an active fund, what is a passive fund. So active funds, they try to outperform the index. So defense index is there. They try to outperform the index by investing in multiple stocks. So they have portfolio managers, they have analysts, they tend to have higher expenses, which can hamper the performance first one. Number two, passive funds are basically intended to match the exact performance of a specific index. They are generally automated with some human elements involved. So they tend to have much lower expenses than active funds. So if you look at the overall funds in this team, most of them have these top holdings. So one is HAL, the second one is BEL, the third one is so HAL makes aircraft trainers, helicopters. BEL provides radar communication and electronic warfare systems. So Solar Industries is involved in creating explosive, strategic explosive manufacturing, and Mazagon builds warships, submarines. So while Cochin Shipyard, it handles naval and commercial vehicles. So these passive funds are low cost and there is a high overlap with these top hold. All of them have the same top holding. 70 to 80% will be very similar. Active funds are a little different. They do not follow the index. They invest in some of these small companies like Premier Explosives, Avalon Tech, MTAR Tech, etc. So these companies are not part of the passive funds that are being managed. So this is a diversified portfolio. The short-term returns are low, but maybe it can do well over a long period of time. So the key question here: should I invest in a defense themed mutual fund or an ETF and just leave my money, The first thing I would like to tell you is the valuations are very, 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 very expensive. The sector is very hot and it can any day fall if there is a stoppage. So the P ratio of HL is 102x, BL 83x. So all of them have got a lot of orders, but everything is future earnings, and all of this is priced in. Probably the next 5 year growth is already priced in, or even 3 year growth is already priced in. So the question is, are you late to the party in investing in? So typically, theme-based mutual funds are not good best bets. So they are again they'll do well when the sector is doing well, and then the chances of a loss or poor returns are very high in thematic sector funds, unless it is a sunshine sector which is expected to keep growing over the next few years. So with 40,000 crore push, and we expect continuous momentum and budget to be allotted to the defense sector in the next few years. So the funds are up 50% plus in 3 months. So retail investors keep investing. So there is a risk of a correction if so you can see this picture, right? So it is at the top. Retail investors are trying to put three ladders and trying to catch it. So there is a risk of a correction if sentiment shifts whenever that happens. So there are two aspects here. If you are looking for a 6 month, 1 year, or a 2 year plan, then it may not be an ideal fund to invest at this point of time. Maybe if you have a 5 year or a 10 year time frame on this theme, then you can consider investing in these mutual funds with an SIP mindset. So invest month on month a specific amount and wait for this sector to keep growing in the next 5 to 10 years, where India can continue to keep investing in defense. The expectation is India will keep investing more money in this sector. So valuation trends merit closer scrutiny. Much of the recent rally appears to stem from sentiment and PE expansion, not necessarily earnings growth. So many companies are trading at elevated capitals, and perfection is a stretch. While many firms still depend heavily on the government as their primary client, the landscape is evolving. So India's defense exports are increasing. So there is a record high of 23,500 crore in the last financial year, a huge increase from compared to the last few years. So the rise in global demand for Indian defense firms means they are no longer entirely reliant on India's Ministry of Defense. That said, for many of these funds, the government remains the anchor client of many of these companies. So orders are also still lumpy. Suddenly, if things recover, the orders may not come. So it is also prone to budget cycle, policy delays, etc. So Indian different funds are selling a story of military research and self-reliance and national ambition. It is a compelling narrative, but the listed ecosystem only have a limited number of companies. So passive funds are essentially index wrappers. So they only provide market beta, not a selective exposure. The active HDFC fund provides broader discovery with a lot of small companies as well, but it has a higher expense rate, and the returns may or may not be on par with this index. So investors are buying into the promise of an industrial defense cycle. So what they are getting is exposure to the key enablers of the journey, the defense stocks, often at premium valuations. So avoid over either don't do any bulk investment right now. At this point of time, maybe it is an avoid. If at all there is a correction, you can enter. If you still believe in the story, then you can do a small SAP with a 5 to 10 year point of view. So handle this with care. Don't chase past returns. So this rally is almost over. Last week I had posted a video about solar industries with a target, and the target price has been hit yesterday. 20 25 to 30% returns was the expectation. It is very close to that price point already. So the there is not a lot of steam left. All of that is over. So if you want to invest, use SIPs, expect volatility, monitor the valuations, wait for the right price to enter. Maybe the sector can lead the next bull run, but never always buy low and sell high. Never purchase stocks or mutual funds at a premium. So if you like this video, hit the like button, share this video to others, subscribe to our channel. You can comment your favorite different stock. We'll do a video on that. So stay tuned for our next mutual fund deep dive. Let's keep growing our wealth together. Subscribe to our channel to know more informative content about investing and about growing your wealth. Happy investing. Thank you.